Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the full year results of Prestige Holdings Limited, which is good news, in fact, for investors. Internationally, not such good news as we would have seen or as we will see. All markets took a turn for the worst over the weekend, despite some recovery or modest recovery in international equity or U.S. markets in particular in the past week. So let's turn straight to Prestige Holdings, and for its fiscal year ended 2019, the company reported earnings per share of just around 58 cents, which was a 35.8% increase from that 43 cents recorded in the prior comparable period. Contributing to that very good performance was an increase in total revenues of about 6.8% from $1.042 billion to just around $1.12 billion. More importantly, total expenses were contained, just a 3.2% increase in total expenses from $307 million to just about $317 million, or a 9.8 million increase. Overall profit before taxes did increase 40.5% from $38.7 to $54.4 million, and profits for the period increased from $26.4 million to just around $35.8 million for the year. Now, it's been a good revenue story for Prestige Holdings over the past 4 years, with revenues or total revenues climbing from around $986 million in 2016 to that $1.13 billion mark in the most recently completed year of 2019. In terms of efficiency, profit before tax margins have been declining over the past 3 years from 6.6% to 3.7% in 2018, but that has been turned around by the company's management, and that profit before tax figure is now, or ratio rather, is now at around 4.9%, which is quite comparable or in line with that 2017 figure of 4.9% also. So improving efficiencies would have redounded to benefits for shareholders, and at a current price of just around $9.25, Prestige Holdings is trading at a price-to-earnings ratio of just around 16 times, which is below the sector average of 19.2 times, and a dividend yield is offered to investors of around 3.5%, which is above that sector average dividend yield of 2.8%. So on the basis of relatively attractive valuations, but tempered by some considerations such as foreign exchange constraints and fairly muted economic conditions locally, Bourse maintains a neutral rating on Prestige Holdings. Turning to international markets, it was another turbulent week. Markets did recover just moderately. The S&P 500, after declining almost 12% in the prior week, would have recovered just around 0.6% of its value over the week. But it was quite volatile, as we can see in terms of some of the events that took place. And there was a lot of intervention that would have taken place by governments and different economic organizations. On Monday, there seemed to be a relief rally where the S&P climbed just around 4.6%. On Tuesday, there was a surprise U.S. interest rate cut of 0.5%. Now, the scheduled meeting is on March 18th, and on March the 3rd, there was a 50 basis point cut, which seemed to be a negative signal for investors that all is not well with the global economy. The market tanked just around 2.8%. On Wednesday, the results of Super Tuesday with Biden, or Joe Biden, emerging as the leader for the Democratic race, would have led markets to rally just about 4.2%. On Thursday, OPEC Plus, which includes traditional members of OPEC and significant oil producer Russia, proposed oil supply cuts of just around 1.5 million barrels of oil, and that would have signaled again or reinforced to investors that all is not well with the global economy. And the S&P would have dropped just around 3.4%. And on Friday, U.S. Trump signed an agreement to provide just around $8.3 billion in support to fight the COVID-19 epidemic, pandemic, as the outbreak continues to rage on. And right now, the count is just over 105,000 cases and just about 3,500 deaths at the global level. And markets also fell just around 1.7%. Now, it was another painful week for energy stocks. BP actually held its own fairly well, just down 0.1%. EOG Resources and Methanex, however, declined just around 12.6% and 14.6%. Natural gas prices managed to recover just about 1.4% as at Friday's close, and WTI crude, or West Texas Intermediate crude, declined 7.8% as at Friday's close. I'm stressing on that because there were some quite significant developments overnight and into early morning trading. Very importantly, investors seem to be continuing the flight to safety. The U.S. 10-year government treasury, or government bond, fell from 1.16% to its current levels, where that's a 10-year, as at the end of February to the close of last Friday's levels of 0.74%. And as at the start of the year, that 10-year Treasury was just about 1.9%. So a very significant drop in U.S. Treasuries, which are seen by most as the safest asset or financial asset that you can buy. And that suggests that there's increased demand for it and a flight to safety by investors. Now, what happened overnight? Well, a lot of anxiety in the market. Russia did not agree eventually to that proposed cut by OPEC Plus to that production cut of 1.5 million odd barrels per day. And that has sent oil into a downward spiral overnight. West Texas crude, or WTI, is down to around $32.50, or a 20% decline from Friday's closing levels. Natural gas is around $1.65, or declining just about 3%. And there has been a flight to quality. Gold has actually gone up just marginally, 1.6%. And that U.S. Treasury yield that was 0.74% odd on Friday's close, well, that's now about 0.5%. So let's let that sink in. If you buy a 10-year U.S. dollar government bond right now, you are going to earn the magnificent return of just around 0.5% per annum for the next 10 years. So U.S. equity futures are sharply lower, almost to the 5% trigger that would halt trading in these contracts. As mentioned, Russia refused OPEC Plus's refusal, which would have tanked oil markets. That U.S. Treasury yield is down, and there seems to be no slowdown to COVID-19 with the infectious cases continuing to increase and those deaths mounting. So a very nervous time for investors overall, and we can only look on and hope that the market starts to correct. But at the moment, it seems there's no end to the panic, so we look eagerly on to the trading that is going to take place in U.S. markets later today. That's it for this week's edition. For more information, give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial.com or check out our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.